Dive into the thrill of the stock market, where every dip is a golden opportunity waiting to be seized. This isn't just investing, it's your chance to become a savvy market player, turning market lows into your financial highs. From spotting the perfect buying moments to mastering the art of patience, these investment strategies are your blueprint to wealth building. Each rule is a stepping stone to unlocking your inner investor, transforming market uncertainties into your playground. Welcome to Stock Whispers, your gateway to investment brilliance. Today we're unveiling three game changing rules for buying the dip, ready to revolutionize your investing journey. First things first, let's talk about what buying the dip really means. It's a cool phrase, right? But it's not just about shopping for deals. Imagine you've got your eye on a video game that's usually a bit pricey. One day you see the price has dropped. Bam! You buy it because you know it's a steal. In the stock market, buying the dip is similar. It's when you buy stocks that have dropped in price, hoping they'll go up again. It's like getting your favorite game on sale but for stocks. Got it? Great! Now that we've got the basics down, let's dive into the strategies that can help you nail this approach without getting burned. Okay, the first thing is super important, folks. Always stop and ask yourself, why am I even thinking about buying this stock? It's kind of like choosing a new smartphone. Are you going for it because it's genuinely awesome and fits what you need? Or just because it's on sale? You gotta be sure there's a real, solid reason behind your choice. Think, do I believe this company's got a bright future ahead? Will they grow stronger over time? This kind of thinking helps you stay sharp and make choices that really make sense for you. Let's say you're all about this tech company that's buzzing with talk about their latest invention, something that's gonna change the game. Now imagine their stock price takes a little tumble. If you've got faith in what they're doing and you truly think they're on the path to big things, then grabbing more shares while the price is down could be a smart move. That belief in their future? That's your why. And here's the thing, having a strong why is like having a secret weapon. It means you're not just jumping on the bandwagon because everyone else is. You're making moves based on your own beliefs and what you see as a solid investment. It's about being true to your investment style and not getting swayed by every wind that blows in the market. So, always have your why ready. It's your North Star, guiding you through the ups and downs of the stock market. Alright, diving into strategy number 2. It's all about having a game plan before prices drop. Imagine you're getting ready for a big shopping day, like Black Friday. You wouldn't just walk in without knowing what you want, right? It's the same deal with stocks. You've got to decide which ones you've got your eye on and the price you're willing to pay before their prices even start to wiggle. This way, when everyone else is running around like headless chickens because the market took a dip, you're chilled out, ready to make your move with confidence. Let me paint you a picture. You've been eyeing this one company, let's call it Investors Hub. You love everything about them. Their products, their vision, the way they handle business. You've been following them so closely. You figure if their stock price ever hits $50, it's like the universe giving you a high five. That's your sweet spot. Then one morning you wake up, check the stock prices, and there it is. Investors Hub has dipped to $50. While others might panic sell, you're grinning because you know this is what you've been waiting for. You've done your homework, crunched the numbers, and you know this is a steal. This is your moment to shine, to make that calculated move because you had your plan locked down tight. This planning ahead is another secret weapon. Think of it like going to the grocery store with a list. You know what you need, what's worth your money, and you're not going to be tempted by that flashy sale on aisle 3 that you don't really need. It's about being smart, staying focused, and remembering what you came for. That's how you make moves that count in the stock market. You're not just throwing darts in the dark. You're aiming with purpose because you've got a game plan. Alright, folks, let's talk about the third and crucial piece of our investment strategy puzzle. This one's all about picking winners even when they stumble. You know, it's a lot like rooting for your favorite sports team. Sometimes they're ahead, sometimes they fall behind, but if they've got a solid track record, you stick with them, right? That's exactly how we want to think about stocks. Now, imagine you're watching a team that's been on a winning streak for seasons. They've got the best players, a solid game plan, and a history of comebacks. But then they have one off game and suddenly everyone's questioning their ability. In the stock market, that's like a strong company having a slight dip in its stock price. Maybe it's because of a market shakeup or a minor setback, but you know this team, company, has what it takes to bounce back. So here's how you play this in the market. First, you're going to want to look for companies that have been growing steadily over the years. We're talking about the ones with solid business models, innovative products or services, and a knack for staying ahead of the curve. These are the companies that, despite the normal ups and downs of the market, show a clear trend of growth. Now, when you see their stock price take a little dip, maybe due to some short-term bad news or a market-wide downturn, that's your cue. It's like seeing your top scoring player miss a shot. It doesn't mean they've lost their touch. It's an opportunity for you to get in on the action, to invest in a proven winner at a discount. Here's the deal. By choosing stocks that are on an upswing, you're not just throwing your money at any stock that looks cheap. You're making a calculated decision to invest in a company with a track record of success, one that's likely to overcome temporary setbacks and continue its upward trajectory. It's not about hoping for a quick win with a risky bet. It's about playing the long game, investing in companies that have shown they know how to grow and succeed over time. So keep your eyes peeled for those comeback stories. The ones where a temporary dip doesn't mean the game's over. It just means there's a chance for you to join the winning team at a better price. Remember, smart investing is about seeing the bigger picture, not just the score at halftime. Sure, they might be behind now, but you know their potential. It's about being smart, patient, and having the confidence to back a winner, even when they're temporarily down. That's how you make the smart moves in the stock market. And that's how you build a portfolio that's poised for long-term success. And there you have it. Always remember, every dip in the market isn't a signal to buy. But with these 3 game-changing rules, you're equipped to sift through the noise and find those golden opportunities. Thanks for tuning in to Stock Whispers. If you found these tips helpful, give us a thumbs up, subscribe, and hit that notification bell so you never miss out on our expert investing advice. Until next time, keep listening to those whispers and let them guide you to your next big win. See you soon!